Think Realty Nation, it's your host, Abhi Golhar. Welcome to the Think Realty podcast. Excited to have you here today. I certainly appreciate you tuning in. I have an awesome show for you today. We'll do a little market wrap-up about New Orleans, Louisiana. I've never had crawfish, and I'm not sure if I will. But New Orleans, man, there's a lot to talk about there. We're also going to be interviewing Chris Ragland, talking about single-family rentals and not losing sight of the overall investing strategy. So that's going to be an awesome 15 to 16-minute interview, followed by the top 5 reasons why your home won't sell quickly, and then to top it all off, how a digital home closing process may or may not be good, and how your state is looking to make this more accessible and to make this a reality. So that's what's coming up on the Think Realty podcast. You want to stay tuned. It's going to be a really good show. Now, this podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. All right, let's talk about New Orleans, Louisiana. Here are the market trends. This is coming from MASH Advisor. The New Orleans housing market 2019. Where is it trending? Here you go. Prices are decreasing while housing inventory is increasing. Does that sound familiar? Low prices and a rise in homes for sale in the market have cooled it down to be a buyer's market. Are you starting to see that shift in your local market? Kind of interesting. You want to pay attention to it. Although New Orleans home values don't compare to the country's more luxurious markets, its real estate is some of the most expensive in the Louisiana real estate market. The luxury homes are on the market for an average of about 14 months in New Orleans. The median home value in New Orleans is $183,000. That's actually a pretty good home value, and it's expected to rise 2.6% in the next year. Median home prices of those that sold in the New Orleans real estate market, about $233,000 if you round up $100. Short-term rentals make up 10% of the residential housing stock in some of the most popular New Orleans neighborhoods. The highest appreciating neighborhood since 2000 in this area is St. Claude Avenue, so definitely check it out. I've never been to New Orleans. I do want to go, not just for the crawfish, but also for Mardi Gras. All right, we have a great show for you lined up today. Like I mentioned, we have Chris Ragland, who'll be joining us right now. And Mr. Chris Ragland, welcome to the show. How are you doing, sir?
Hey, man, I'm doing great and excited to be here. Thanks for having me.
Hey, you got it. Likewise. I'm excited for the conversation here over the next 15 minutes or so. Give us a little background on who you are, what you do over at Noble Capital.
Sure. So I'm the Chief Operating Officer at Noble Capital. We're a private lender primarily focused in the single-family residential space. We're headquartered in Austin, Texas. So most of our business is actually in the state of Texas. That's essentially what we are and what we do. A lot of people know what private lending is on short-term fix and flip and single-family resi houses. And I mean, I've been in real estate for about 20 years now. So I've got a lot of experience. I've worked in a lot of different sectors and different aspects of real estate. So, but hey, I'm excited to be here today. Again, thanks for having me.
You got it. Let's talk about the elephant in the room, which is the big, crazy, super bubbly real estate market that everybody seems to be talking about. There's no inventory. There are no deals. That's how I feel, right? Like, it just cracked this iPad on my head. There are no deals, absolutely. And now I have to overpay. I have to buy this stuff at a premium, right? And then I lose my posterior. And then I don't focus on the income, wealth building strategy. I don't focus on cash flow. And that is a very big cornerstone to Noble Capital, right? It's not only just doing the flipping activity, it's also positioning yourself well financially for the future. And that comes from buying income producing assets. Talk to me about that a little bit and what you see out there, especially where you are in Austin. It's a very good market to be in, especially if you're flipping. But there are other markets around the country that are starting to level off. I mean, I'm sure maybe you're seeing a little bit of that in Austin. How do I, as a new investor, we'll talk about the new investors first, kind of wrap my head around what's going on, man?
Okay, so you made a lot of comments there, and you're really on point. I mean, we're in some would say a frothy market, right? So there's a lot of good stuff that's going on. There's a lot of people in the space. There's new people every day getting into the space, and as we're worried about what's next and what's on the horizon. So I would say it has become more difficult to find that great deal with all that equity and then turn around and flip that house and make that money. That being said, you have to get a little bit more creative in terms of how you're finding your deals from an acquisition strategy, but also the marketplaces that you're in. There are a lot of marketplaces that are still full of really rich deals. The point is, it may not be in your backyard. And that's the thing. People will get into a market where there's a lot of good stuff going on and they can't find a deal. And I'm going to say, hey, if you're in real estate, you have to be mobile. You have to be able to pick up and go somewhere else where that deal is going to be to find that deal. So there are deals out there. You just have to work harder. That's the simple answer to that. Now, you made another comment.
So would you go to, say, a little outside of Austin, or would you just go to like a totally different state? I mean, you got Austin, you got Dallas, Fort Worth, Houston. You have so many big cities in Texas. I live in Georgia. We got Atlanta and Atlanta. I think that's pretty much it, right? Like
that's pretty much, that's pretty much it. You know, I've got family in South Georgia, and they talk more about Florida than they do about Georgia.
Oh, come on. There is that Florida-Georgia line, though, man. I mean, you know what I mean.
I know exactly what you mean. I could talk about South Georgia all day. I mean, I know all kinds of stupid things. But we are in Texas, right? And we're based in Austin. And yes, there are many major cities in Texas, but I'm not actually advocating another major city, although that can be a solution. I'm advocating a secondary market where you're going out into a suburb. You're looking for a place where perhaps there's something economically interesting going on. There's new job creation. There's new schools. There's something has to be compelling about that secondary market. So for us, we advocate concentrating along the interstate highway, I-35, that splits Texas in half. So we do a lot of work in secondary markets between Austin and Dallas and Austin and San Antonio, tremendous amount. And specifically, by the way, those secondary markets tend to be really, really great rental markets. So if you're going to be building your income portfolio, that's a place I'd go fishing.
That's right. I mean, I think I may have seen you. Do you obviously you go to the Think Realty conferences. Do you also go to IMN by any chance?
I do. I go to IMN. I've been to a few of the other ones as well.
Yeah, so I think I've met you there, I think, once a little while ago. And it was you and it's Romney Navarro.
Romney Navarro is one of my partners. Yep.
Yeah, so I met him at one of the IMN conferences, and we ended up talking about the secondary markets. And we had this conversation a year and a half ago. And the conversation back at some of these national, more institutional conferences, well, where do I find those deals? We were having this conversation a year and a half ago. Do you still think that is a good strategy, the secondary markets, or should I go even more remote and take a look at tertiary markets in this case?
Right. So, I still think there's a lot of really good deal flow in the secondary markets. You don't have to go off the reservation or really get off the ranch, as we would say in Texas, to go somewhere else to find these deals. They are there. They are present. You don't have to do that. That being said, I still see great deals in the primary markets. And then, at the right basis, I'll do a deal just about anywhere, right? So we always have that.
Yep. Before we go any further, let's talk about some of the lending programs that Noble Capital has that investors like myself, borrowers like myself, can utilize, say, in the Texas area. Do you only lend in Texas? Are you nationwide? Question number one. Question number two, what are some of the loan programs that you're finding the majority of your borrowers take advantage of right now?
Sure. So we actually have a subsidiary. We own a few companies, and one of them is called Streamline Funding, right? So that's our direct lending program. So we would lend to a borrower. And in that program, we're just in the state of Texas. Okay. I mean, we're a little blessed in that, we've got Austin, Dallas, Houston, San Antonio, and everything in between. I know. Gee, gosh, guys.
I mean, come on, man. You don't have to rub it in like that.
Right. Yeah, I'm going to throw a shout out to my cousins down in Valdosta. They're really excited about that real estate market in Georgia.
That's right. No, it's so true. So we've got Streamline Funding funds only in Texas, and then what are some other states that you fund in?
So for right now, we're just doing Texas. We've been
Texas.
tempted many times. Yeah, we've had so many offers and requests to actually build a platform and take it outside of the state. Before we did that, or before we do, because we've actually productized. So instead of just lending on a fix and flip, we've started taking our lending program and creating other products, right? So one of the things that we do in Texas that's a little bit different and more aggressive, we actually lend about 50% of our portfolio on new construction. So, and then a lot of people, they're just like, wow, that's a whole
Yeah.
different element, you know? Yeah. So we do a
You're
lot of
right.
new construction.
Yeah, you don't see, I mean, you might see, if you find the right lender, you'll probably see maybe 10, 15% of their portfolio going to new construction if they even want to take on the appetite for that. Otherwise, it just doesn't happen, right? Because you're tearing down the asset. You need a whole heck of a lot of confidence in that operator to get the deal done. And you also need confidence in your valuation of that ARV upon completion of the project. So I'm with you on that. What are some of the loan programs that you have in place for those borrowers in Texas?
Yeah, so we have the core fix and flip product, which I think everybody's the most familiar with. And then we have one for new construction in particular. We also have a landlord product, right? So we're looking at guys that are wanting to, it's kind of like a mini perm is what I would say, using maybe a bank term, right? So it's like a mini perm. So they come in, they use one of our products to acquire and do the renovation. And then they sort of fall into this next product where it becomes a landlord product. And then at that point, they're probably working with traditional long-term financing, brick and mortar banks, and then taking our loan out after a couple of years once the portfolio has stabilized. So that's the third product. We have a land product that we don't see that too often in other marketplaces, but here at the right basis, we'll do a land product where they're just doing an acquisition. It can be a strategic play because they're trying to put parcels together and do a larger deal. So we do that. We also have a multifamily product. So we have people that are doing maybe small rentals. I'm talking about those 24 unit up to maybe a couple hundred unit complex. We have that product as well.
Okay.
And then we have the last one, which is probably the most interesting for us. We call it a community development loan. And what it is when we have a larger product where you're building say 12 or 20 townhomes all at the same time. So it's like a miniature development product.
Yeah.
We don't do any large trees to keys, as I would call it, like 300 homes at a time.
Yeah.
But this community development loan is really, I think, unique and something that we're known for.
Awesome. When we talk about borrowers that are flippers, and they're constantly they're getting in touch with you, Chris, and they're like, man, I want to keep borrowing money to do my flips, to borrow money to do flips and more flips and more flips, and they don't recognize that cash flow also reigns king. What's your suggestion to them? Is there anything do you sit down with them and say, hey, we appreciate that you're borrowing for these flips and you're doing them on time, you're doing a good job. Maybe consider buying rentals for your portfolio as well?
We do. We're careful not to become advisors, if you will, because that's really not our space. But, speaking from experience, man, I can't tell you how many people got out of the game, quote unquote, before the last Great Recession because they didn't have a rental portfolio to fall back upon, right? They did, that was their game, was flipping a property, maybe building one here and there, and then they didn't have a portfolio. So, I mean, there's plenty of these education programs that make these ratios like flip 2 and then rent 1, and that can work. But I think everybody has a little bit of a unique strategy, and you need to figure it out for yourself. For me personally, what I recommend people to do is build a rental portfolio at least to the point where off the cash flow off that rental portfolio, you could survive during the next correction. Because it will happen, and you're going to want to be positioned as a business owner to continue to be very opportunistic instead of being forced to do deals to survive. That's the position you never want to be in.
Man, you're totally speaking my language. So you're saying that there's going to be a correction at some point in time. I thought the housing market just really goes up and never comes down.
Right. Well, you must have gotten into real estate sometime after, say, 2010.
Right.
Look, yeah. In our space. That's it. They're like, hey, I've been doing this. It's great. I've been doing this for 8 years. And I'm thinking, that's not very long. That's not a long time, man.
Right. Or I just have amnesia, one of the two things, right? Like that's probably.
Right. Or you have amnesia.
Right. I fell on a rock and all of a sudden, I don't remember anything.
Yeah, it's true. One or the other.
So let's say we do hit a correction, right? Whenever that happens in the next 50 years. What should I do to prepare for it now? What are some things that I should do to prepare for it, and what are some things that I should do during a market downturn?
Yeah, so absolutely. So to prepare for it, you absolutely need to make sure, in my opinion, there's really two things. One, that you have enough cash flow coming in from these passive rentals. They still have to be managed. I don't use passive in the term of it doesn't require any work, and it actually requires a lot of work, but you need to make sure that you have a portfolio that's generating that income. The other thing that's really important for people in our industry to do and to prepare for is to make sure whatever infrastructure you're building, make sure it's dynamic. Make sure you can scale it up when you have the opportunity. Make sure you can scale it down when you do not. I see too many people taking on overhead, signing big office leases. It's really sexy. It's great. I've got a company car and everything's fantastic. And I'm thinking, bro, your overhead is going to kill you.
I've got that foosball table, bro. Right? Like you need the foosball table. You need the keg, right? You need the unlimited free coffee. You need all that stuff.
That's right.
Right.
The full kegerator. The kegerator.
Is that what it's called? The kegerator.
I think so.
I'm gonna send you a T-shirt with just hashtag kegerator. I think that's gonna be. It's gonna be good. So during a market downturn, though, you would say, what, buy more? Should I be afraid to buy? Should I be running toward what people are running away from?
Yeah. So, and this is kind of a sad thing because when you see a correction, the people that took too much risk are the ones that are going to get burned. So I would tell investors, if you've prepared well, you're sitting on some dry powder, if you will, some cash reserves ready to take advantage of an opportunity. So that's another thing is don't be so levered and have no money in the bank. Like you need to be prepared. Have your portfolio built up to take care of your bills, be dynamic so you can scale down your overhead. And number 3, have that dry powder, because where are the deals? It's actually the other real estate investors that didn't do those things. That's where the deal flow comes from.
Man, we're gonna have to hang. Like I'm just gonna fly to Austin so we can hang out and just chat more, because this is totally exactly 1,000% right. We've got to go. But I want to offer our viewers 2 more things. One, a comment, your comment about a question that I have, and then, of course, your contact information and the contact information for Streamline Funding, and then, of course, Noble Capital. The question that I have for you, Chris, is very simple. If I don't have a portfolio of single-family rentals right now, does it make sense to buy them right now, given the potential premium that I'm paying? Instead of buying them here, I'm buying them up here. Or does it make sense to wait and buy later? That's question 1.
That's a good question. So again, it's using the premise that you're always going to have to pay a premium right now. I do not subscribe to that philosophy. I think that you put in more work, you look in a different marketplace, you will find a good opportunity. So the short answer is you still buy now. You can still find good deals now. You just have to work harder.
And then the follow-up question to that is, if I'm buying now, should I be concerned if in a correction there's, say, losses of jobs, right? My tenants all of a sudden just lose their jobs. I have to renegotiate leases. I mean, that becomes a little dynamic then as well. Of course, I'm paying property management, and I still owe that monthly payment back to the bank. How do I manage that process? Do I just renegotiate the leases for less amount of money so I can break even? Do I negotiate with the bank for a little forgiveness? Any thoughts there?
Yeah, that's a whole nother episode, to be honest with you. We
True.
Could talk about
we gotta have you back.
Yeah, that's hard to give you a quick answer. We could do a whole nother one of those episodes because there are strategies, and you just named a few. Working with your lender, working with your tenants, working with your service providers. You have to do all of those things. One of the things, though, to hedge against that risk, number 1, make sure that you always have the right basis on your property, which you're going to if you're going to have a good cap rate. You have to have a good basis, right? You're not going to get into that deal to begin with. But here's the thing, and this is why I love single-family residential investing. Everybody's got to have a place to live.
Yes.
If you find you're going to go buy strip centers and commercial property, that asset class, that's the first to go. But everybody still has to have a place to live. There are solutions in single-family resi. You just have to get creative in a downturn.
Boom. Chris, that's the show. I appreciate it, man. Thanks so much. How do I get in touch with Streamline Funding if I'm a borrower in Texas and I need money now? What's the best way to do it?
The best way to do it's the website, just like always,
Cool.
right? I would say it's streamlinefunding.com. That's streamlinefunding.com. Hit us up.
And if I want to carry a conversation on with you and I was inspired because of how good looking you are on camera, how do I do that? What is it? COO@noblecapital.com?
Yeah, right. Yeah. I don't know. I try to stay anonymous, man. I got to stay over here where nobody can get a hold of me.
No worries. I mean, so
streamlinefunding.com. Be real candid.
Yeah.
Hey, I love mentoring people and answering questions. If you do have a question for me directly, hit me up on my LinkedIn. That's probably one of the best ways to get a hold of me.
Bingo. That's what I tell people myself. Cool. So Chris Ragland, find him on LinkedIn. If you're looking for capital in Texas, head on over to streamlinefunding.com. Chris, this has been so much fun, a pleasure. I certainly appreciate your time today. Thank you so much.
Thanks for having me.
You got it. This segment is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. Awesome interview with Chris Ragland. You want to get in touch with him, you know how to do it. Let's continue the show. I have another couple minutes before we end it here, but I wanted to make sure that we finished it with a bang. Here are the top 5 reasons why your home won't sell quickly. This is an article from signalsaz.com. Number 1, price. If you price yourself out of the market, guess what's going to happen? Your home's not going to sell. Don't you agree about this? Number 2, curb appeal. Kind of get into the basics here. If you don't have a well-manicured lawn, or if you're always biting your nails, kind of like I do every now and then, guess what's not going to happen? It's not attractive, it's kind of funky, and it's not going anywhere. Number 3, interior appearance. Appearance. That's a good word. I make it up all the time. It's all right. It happens all the time. Actually, it doesn't happen all the time, just that once. Appearance. Interior appearance. If your home looks like crap when you walk in, don't get me wrong, crap in my world stands for cash rich and asset poor. We'll talk about that later. But this is not the kind of crap that I'm talking about. If you walk into a home and it does not look appealing, your home's not going to sell. It's as easy as that. Number 4, if it smells, if you got some funky odors, yep, nope, no bueno. You got to make sure that you clean out that funkadorness out of your house. That's right, made up another word right there. Number 5, marketing. If you have bad marketing for your home, guess what's not going to happen? It's not going to rent, it's not going to smell, and even the guy walking around the street saying, well, even if I wanted to squat here, I can't squat here because it smells bad, that's when you know you need to get a deep clean. Or, you know what? You could just get a haircut and it'll be okay. All right. Quite literally, if you need to take a haircut on the price, then take a haircut on the price. Next, I want to talk about more states that are legalizing the digital home closing process. I think blockchain in the real estate world is going to be very interesting to watch. But in the meantime, Iowa Governor Kim Reynolds signed a law that enables digital closings for mortgage transactions, digitizing a time-consuming and paper-intensive process. You know what's crazy? I've been asking for this and asking for this and asking for this. The real estate industry needs this type of disruption. It's a good thing. Believe me, it's a very good thing. And quite frankly, I don't like the long pieces of legal paper. Like, who uses that anymore? Seriously. All right, get in touch. Had a lot of fun on today's show. Interview Chris Ragland. You definitely need to hit rewind or go there and rewind that and play that again and again and again until you understand these important concepts we talk about. Get in touch with Chris. You know how to do that. Get in touch with me. Go to thinkrealty.com. You can also follow me anywhere online at Abhi Golhar. I love totally crushing on Instagram and LinkedIn right now. Think Realty Nation, that's a wrap. We also have a magazine called Think Realty Magazine. You can pick it up at Barnes & Noble. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. That's a wrap, Think Realty Nation. Until next time, happy investing.